Yeah, what's up, guys? Welcome to another episode of our weekly analysis. Last week was awesome because we projected for US30 sell and it did exactly as we expected. Of course, series of pair did play along as pound USD did correct towards the retesting area. So basically, we did also see a nice move on US oil. This week, we are going to start as usual with the index. So this week, basically, I'm looking out for a bearish continuation, looking at the current price action. We can see that price is still in a downward trend, right? Now we have seen that price did break this structure created at 102.96 price level, and we have seen a retest at that point. Now, why I'm expecting the bearish continuation is because where we had this rejection is basically not a point for which you can count as a significant level. So basically, we should be seeing price continue back into this zone considering price action. Now, in this regards, it therefore means that this week there is a possibility that we should be seeing a weakness in the USD. So on that note, I will be looking out for price action confirmation or technical confirmation on pound USD for price to possibly push higher. So that means that looking at the daily time frame right here, we could see the previous rejection as anticipated, and price is heading towards this level, this previous broken structure. So I'm expecting a further dip into the zone, then price to continue bullish in that direction towards this supply zone. Basically, this liquidity is what I'm targeting. I'm expecting this liquidity to be taken out in the bullish direction for price to push higher. This is the daily time frame. So basically, for the week, as USD index is nose diving, I am expecting pound dollar to push higher. So let's see if that correlates with the gold. So on gold, you can see same here on the daily time frame. Gold is reacting at this accumulation area where price did accumulate before pushing higher in the previous price action. Now we have seen a drop back into that zone. So basically, last Friday candle closed as a rejection. It did push higher, did close as a rejection. This, if you are following candlestick patterns, this denotes weakness in the buys, which probably would pave way for a sell. So what I'm going to be doing, irrespective of this zone, I'm just going to be looking out for a break in this Friday candles low. Then of course, looking at the volume, I would likely go for sell. But of course, I'm going to be very cautious because this zone is not just a zone you need to just jump into trades. So you want to see a break below the zone, then you could think of price trying to take out this liquidity right here to cover this distance. Right now, I will be more positive with regards to the gold or the yellow metal, in the sense that if USD index is going to be nose diving, then we should see weakness in the USD, thereby giving room for gold to push higher. So my expectation is if Friday candle's high is taken out, then we should see price push in the bullish direction. So that is what I'm going to be paying attention to know which direction to engage when it comes to the yellow metal, because at this point it's basically gonna be a buy or a sell depending on which level is taken out first. Now on the US oil, so US oil, I'm just going to be sitting on my hand. I'm not going to be looking at anything bearish on US oil unless on the intraday perspective. But on the swing perspective, I expect this high to be taken out. So if this high is taken out, as we have already seen a rejection here, so now previously we did see a rejection at this So first rejection, second rejection, and this happens to be the third rejection. So we are not concluding yet to go bullish unless, of course, this high is taken out. When the 92.50 level is taken out, then of course I will expect a smooth push to this level, and of course from that level then we could see price further push higher into this supply level in the long term. So this is basically what I'm expecting, or what I will be looking out for on US oil. So concluding this analysis for the week would be US30. So US30 basically we can see price is still in an ascending trend. So basically price is still looking bullish. So we did see a break in structure. Previous structure was taken out, then we are announcing a retest of that broken structure. So basically this is a demand zone because we did see this formation of a morning star at that area where price did push higher. So I'm expecting a further dip into the zone, then price to push higher. Then of course we have I'm not also going to neglect the trend line. We might see price further dip to retest at the trend line before pushing higher. So basically we just want to see the price action reaction, what price action does, sorry, before I could confirm the bulls and join the bulls. So of course, basically, like I said, I'm going to be paying more attention to the bulls on US30, unless of course there is a strong volume in favor of the bears, which probably might break. So I just want to stay bullish on US30. So this is basically my view. So let me quickly check out the 4-hour time frame on this particular pair. So even if you are looking at the 4-hour time frame, look at what is happening there. You could see the last 4-hour candle closed bearish, so meaning that there is a probability that we still have to push downward into the zone before we could possibly expect some reaction, then maybe push higher. So we're just gonna stay glued to price action. You already know I am a student of price action. I am a student of supply and demand, of course. So we're just gonna stick to our strategy and we're gonna trade as the market unfolds. Now, do remember our live stream is gonna come up on Tuesday, Thursday, and Friday. It is 12:45 p.m. GMT. So I hope to see you there and join me as we trade live and learn together while we also make the pips and the money together. Until then, stay safe and bye-bye.